Ease INTRODUCT. What if I told you that the window to position yourself in silver is rapidly closing? What if the opportunity that many investors have waited years for is now only days away from a major turning point? Throughout history, wealth has transferred from the uninformed to the prepared, and today we may be standing at one of those critical moments. The silver market is showing signals that seasoned investors cannot afford to ignore. Supply pressures are rising, industrial demand is accelerating, and global financial uncertainty continues to push smart money toward hard assets. The question is no longer whether silver has potential. The question is whether you will act before the next major move begins. In this presentation, we're going to examine the facts, the trends, and the reasons why silver holders may have only days left before a powerful market explosion changes the landscape forever. When investors look back at major wealth building opportunities throughout history, one common pattern appears again and again. The biggest gains are rarely made after everyone recognizes the opportunity. Instead, they are made during the period when evidence is building, signals are flashing, and the majority of people remain distracted by other events. Silver has repeatedly demonstrated this characteristic. It spends long periods moving quietly, testing the patience of investors, and then suddenly shifts into a powerful upward move that catches the market by surprise. Understanding why silver may be entering another critical turning point requires looking beyond daily price fluctuations and focusing on the larger forces shaping the global economy. Silver occupies a unique position in the financial world. Unlike many assets that serve only one purpose, silver functions as both a precious metal and an industrial metal. This dual role creates a dynamic that few other commodities can match. During periods of economic uncertainty, investors seek silver as a store of value. During periods of industrial growth, manufacturers require silver for production. As a result, silver benefits from two powerful sources of demand that often operate simultaneously. For years, many investors have focused their attention primarily on stocks, real estate, and technology sectors. These markets have generated significant headlines and attracted enormous amounts of capital. Meanwhile, silver has remained relatively underappreciated despite the growing importance it plays in modern industry. This disconnect between public attention and fundamental value is often one of the earliest indicators that a market may be approaching a turning point. A critical turning point does not occur overnight. It develops gradually as underlying conditions begin to shift. Supply tightens, demand increases, inventories decline, investor sentiment changes, institutional interest grows. Eventually, these factors combine to create a situation where even a small increase in buying pressure can lead to substantial price movement. One of the most significant developments affecting silver today is the changing structure of global demand. The world is undergoing a major technological transformation. Renewable energy projects continue expanding across multiple continents. Electric vehicle production continues increasing. Advanced electronics require specialized components that rely on silver's unique conductive properties. Solar panels consume large quantities of silver, and global investment in solar infrastructure remains strong. Silver possesses the highest electrical conductivity of any metal. This characteristic makes it extremely valuable for applications where efficient energy transfer is essential. As governments and corporations invest billions into clean energy initiatives, the demand for silver naturally rises. Unlike speculative demand, industrial demand often represents long-term consumption because the silver used in products is not always economically recoverable. The growth of solar technology represents one of the most important trends influencing silver demand. Solar manufacturers rely on silver to maximize efficiency within photovoltaic cells. As countries pursue ambitious renewable energy targets, solar installations continue reaching new records. Every expansion in solar production translates into additional silver consumption, creating a steady source of demand that did not exist at the same scale decades ago. Electric vehicles provide another powerful demand driver. Modern vehicles contain increasing amounts of electronics, sensors, switches, and electrical systems. Electric vehicles require even more sophisticated electrical infrastructure than traditional automobiles. Each advancement in vehicle technology contributes to silver consumption, reinforcing the metal's strategic importance in the modern economy. At the same time that industrial demand is increasing, the supply side of the equation faces significant challenges. Silver mining is a complex and capital-intensive process. Bringing new mines into production often requires years of exploration, permitting, financing, and development. This means that supply cannot quickly respond to sudden increases in demand. Many investors assume that rising prices automatically lead to abundant new supply. In reality, mining projects face numerous obstacles, including environmental regulations, geopolitical uncertainty, labor shortages, rising operational costs, and declining ore grades. These factors can restrict production growth even when market conditions appear favorable. A large portion of global silver production comes as a byproduct of mining operations focused on other metals such as copper, lead, and zinc. This creates an additional challenge because silver output is not always determined by silver demand alone. If production of primary metals slows, silver supply may also decline regardless of market demand. Inventory levels provide another important clue regarding potential turning points. Inventories act as a buffer between supply and demand. When inventories are abundant, temporary shortages can be absorbed without major disruptions. However, when inventories begin shrinking, markets become increasingly sensitive to changes in demand. Over time, persistent deficits can gradually reduce available stockpiles. Once inventories reach critically low levels, markets often experience heightened volatility because there is less material available to meet unexpected demand increases. Investors who monitor these trends recognize that inventory depletion can create conditions favorable for substantial price appreciation. Monetary policy also plays a significant role in silver's outlook. Throughout history, precious metals have often performed well during periods of currency uncertainty. Governments around the world continue managing substantial debt burdens. Central banks face difficult decisions regarding interest rates, inflation control, and economic growth. These factors influence investor behavior and can increase interest in tangible assets. Inflation remains a major concern for many individuals and institutions. Even when inflation rates moderate, the cumulative impact of higher prices affects purchasing power. Investors seeking protection against currency depreciation frequently turn to precious metals because they possess intrinsic value independent of government-issued currencies. Silver's affordability compared to gold provides an additional advantage. Many investors who cannot easily accumulate large quantities of gold find silver more accessible. This accessibility broadens the potential investor base and increases participation during periods of heightened interest in precious metals. Market psychology is another essential factor when evaluating turning points. Financial markets are driven not only by fundamentals but also by perception. During prolonged periods of stagnation, investor interest often declines. Media coverage decreases. Analysts focus on other sectors. Retail participation weakens. Ironically, these conditions can create opportunities because they often occur before major trend reversals. As conditions improve, sentiment begins changing gradually. Early investors recognize emerging trends and start accumulating positions. Institutional investors conduct research and adjust allocations. Media attention slowly returns. Eventually, broader public participation follows, amplifying price movements. Historically, silver has demonstrated a tendency to move rapidly once momentum develops. Unlike some assets that appreciate gradually, silver often experiences sharp advances over relatively short periods. These moves can surprise investors who have become accustomed to years of limited price action. The relationship between gold and silver also deserves attention. Many analysts monitor the gold to silver ratio as an indicator of relative value. When the ratio reaches historically elevated levels, some investors interpret it as evidence that silver may be undervalued compared to gold. While ratios alone do not predict future performance, they provide useful context regarding historical relationships between the two metals. Global geopolitical uncertainty adds another layer to the silver story. Economic disruptions, trade tensions, currency instability, and regional conflicts all influence investor behavior. During uncertain times, market participants often seek assets perceived as stores of value. Silver has maintained this reputation for thousands of years. Central bank actions continue attracting attention as well. Although central banks primarily hold gold reserves, their policies influence broader precious metals markets. Changes in monetary conditions, reserve strategies, and financial system confidence can affect investor demand for both gold and silver. Another important consideration involves the growing recognition of resource scarcity. The world depends on numerous critical materials to support technological advancement. As demand increases, securing reliable access to these resources becomes increasingly important. Silver's role in advanced manufacturing, electronics, renewable energy, and medical applications reinforces its strategic significance. The investment landscape itself is evolving. Younger generations are becoming more interested in alternative assets and diversification strategies. Digital platforms have made precious metals investing more accessible than ever before. Information spreads rapidly across social media and online communities, accelerating awareness of market opportunities. Large institutional investors are also paying closer attention to commodity markets. Years of underinvestment in resource development have contributed to concerns regarding future supply constraints. As institutions seek diversification and inflation protection, commodities, including silver, may attract increased capital flows. One reason turning points are often difficult to recognize is that they emerge while skepticism remains widespread. Most people wait for confirmation before taking action. By the time confirmation arrives, a significant portion of the move may already have occurred. Successful investors understand that opportunities frequently appear before consensus forms. The silver market today exhibits several characteristics commonly associated with developing turning points: rising industrial demand, constrained supply growth, declining inventories, inflation concerns, monetary uncertainty, and increasing investor awareness all contribute to a potentially favorable environment. These factors do not guarantee immediate price appreciation, nor do they eliminate market volatility. Financial markets remain influenced by countless variables, including economic conditions, investor sentiment, government policies, and unexpected events. However, when multiple supportive trends converge simultaneously, the probability of significant market movement often increases. Experienced investors focus on probabilities rather than certainties. They evaluate evidence, assess risk, and position themselves accordingly. In the case of silver, the evidence suggests that the market may be approaching a period of increasing importance. The combination of industrial necessity and monetary relevance creates a foundation that few other assets can replicate. As demand continues expanding across multiple sectors and supply struggles to keep pace, the balance between buyers and sellers becomes increasingly important. Markets ultimately respond to these forces. When demand persistently exceeds available supply, prices adjust to restore equilibrium. This process has occurred throughout economic history and remains one of the fundamental principles governing commodity markets. The possibility of a critical turning point in silver is not based on a single event or headline. Rather, it reflects the cumulative impact of numerous interconnected trends that have been developing over many years. Each trend may appear manageable in isolation, but together they create conditions that deserve careful attention from anyone interested in wealth preservation, resource investing, and long-term financial strategy. One of the most important factors influencing the future of any commodity market is the relationship between supply and demand. While many investors focus primarily on price movements, experienced market participants understand that prices are often the final result of deeper forces operating beneath the surface. In the case of silver, one of the most significant developments taking place today is the growing global supply shortage that remains largely overlooked by the average investor. Understanding this issue requires looking beyond headlines and examining how silver is produced, consumed, and distributed throughout the world economy. For decades, silver has played a critical role in both monetary history and industrial development. Unlike many commodities that serve a limited number of purposes, silver is used across a vast range of industries. Electronics manufacturers depend on it. Renewable energy companies require it. Medical technology utilizes it. Aerospace applications benefit from it. Telecommunications infrastructure incorporates it. As modern technology advances, the demand for silver continues expanding into new areas of economic activity. What makes the current situation particularly noteworthy is that demand has been increasing while supply growth has struggled to keep pace. This imbalance does not always produce immediate market reactions. In many cases, shortages develop gradually over extended periods. Existing inventories help mask the problem. Market participants continue operating as usual. Consumers remain largely unaware of the underlying pressures. Eventually, however, the gap between supply and demand becomes increasingly difficult to ignore. To understand why silver supply faces challenges, it is important to recognize how silver mining works. Many people assume that silver comes primarily from dedicated silver mines. While primary silver mines certainly exist, a substantial portion of global silver production is actually generated as a byproduct of mining operations focused on other metals such as copper, zinc, lead, and gold. This creates a unique dynamic because silver production is often influenced by conditions affecting entirely different industries. When a mining company develops a copper project, silver may be extracted alongside the primary metal. The company's production decisions are usually based on copper economics rather than silver demand. As a result, even if silver demand rises dramatically, supply may not respond quickly because silver output depends heavily on decisions being made elsewhere in the mining sector. This dependence creates limitations that many investors underestimate. If economic conditions reduce investment in base metal mining projects, silver production may stagnate or decline regardless of how strong silver demand becomes. Unlike industries capable of rapidly increasing output, mining requires years of planning, permitting, financing, and construction before new production reaches the market. The timeline required to develop new mines represents one of the most significant barriers to supply growth. Discovering a promising mineral deposit is only the beginning. Exploration must confirm the resource. Environmental studies must be completed. Government approvals must be secured. Infrastructure must be developed. Financing must be obtained. Construction must be completed. Production systems must be tested and optimized. This entire process can take a decade or longer. Consequently, decisions affecting today's silver supply were often made many years ago. If demand increases unexpectedly, producers cannot simply activate large amounts of new capacity overnight. The industry operates within long development cycles that limit its ability to respond quickly. Another challenge involves declining ore grades. Over time, many of the world's richest and most accessible mineral deposits have already been exploited. Mining companies increasingly process larger volumes of material to extract the same amount of metal. Lower ore grades translate into higher costs, greater energy requirements, and increased operational complexity. As ore grades decline, production efficiency often suffers. Companies must invest more capital to maintain output levels. These realities place additional pressure on supply growth, particularly during periods when financing becomes more difficult or economic conditions become uncertain. Rising production costs represent another obstacle facing the mining industry. Energy expenses, labor costs, equipment prices, regulatory compliance requirements, and infrastructure investments have all increased significantly in many regions. Mining operations require enormous amounts of fuel, electricity, machinery, and skilled labor. Inflation affects each of these components. When costs rise faster than revenues, companies may delay expansion projects or reduce investment in exploration activities. These decisions can limit future production capacity and contribute to long-term supply constraints. Investors often focus on current production figures while overlooking the impact that reduced investment may have years later. Geopolitical factors add another layer of complexity. Many major silver-producing regions face political uncertainty, regulatory changes, taxation disputes, and social challenges. Governments may alter mining regulations. Communities may oppose development projects. Infrastructure disruptions may affect transportation networks. International trade tensions may complicate supply chains. Each of these factors introduces risk into the production process. Even when substantial mineral resources exist underground, extracting those resources and delivering them to market is not always straightforward. Delays and disruptions can reduce available supply and create uncertainty regarding future production forecasts. At the same time that supply faces these challenges, industrial demand continues expanding. One of the most significant drivers of silver consumption is the global transition toward renewable energy technologies. Solar panels require silver because of its exceptional electrical conductivity. As nations invest heavily in clean energy infrastructure, silver consumption increases accordingly. Governments around the world have announced ambitious renewable energy targets. Utility companies continue developing large-scale solar installations. Businesses invest in sustainable energy solutions. Homeowners adopt solar technologies at increasing rates. Every new solar project contributes additional demand for silver. The importance of this trend becomes even clearer when considering its long-term nature. Renewable energy development is not a temporary phenomenon driven by short-term market conditions. It represents a structural shift affecting global energy systems. As adoption increases, demand for materials essential to these technologies is likely to remain strong. Electric vehicles provide another major source of demand growth. Modern vehicles rely on increasingly sophisticated electrical systems, sensors, controls, and connectivity features. Electric vehicles require extensive electrical infrastructure and advanced components that often utilize silver. As governments encourage vehicle electrification and manufacturers expand production capacity, silver consumption benefits. The automotive sector's transformation creates a sustained source of demand that extends beyond traditional industrial applications. Consumer electronics also contribute significantly to silver demand. Smartphones, computers, tablets, wearable devices, and countless other electronic products depend on silver's conductive properties. Technological innovation continues creating new applications that require reliable electrical performance. Medical applications further reinforce silver's importance. Silver possesses natural antimicrobial properties that make it valuable in healthcare settings. Medical devices, wound care products, water purification systems, and specialized equipment frequently incorporate silver-based components. While each individual application may represent a relatively small portion of overall demand, the combined effect across multiple industries creates substantial consumption. This diversification makes silver demand more resilient because it is not dependent on a single sector. Inventory trends provide additional evidence regarding potential supply shortages. Inventories serve as a buffer between production and consumption. When production exceeds demand, inventories grow. When demand exceeds production, inventories decline. Over time, persistent deficits gradually reduce available stockpiles. This process can continue for years before attracting widespread attention. Market participants draw material from existing inventories to satisfy demand, allowing consumption to exceed production without immediate disruption. However, inventories are finite. As stockpiles shrink, markets become increasingly vulnerable to unexpected demand surges or supply interruptions. The smaller the inventory cushion becomes, the greater the potential impact of any additional imbalance. Many commodity markets have experienced similar situations throughout history. For extended periods, inventories masked underlying shortages. Prices remained relatively stable. Public awareness remained limited. Eventually, inventory levels reached critical thresholds, triggering increased volatility and significant price adjustments. Investor demand introduces another important variable. During periods of financial uncertainty, investors often seek tangible assets capable of preserving purchasing power. Silver's long history as a store of value makes it attractive during times of economic concern. Unlike industrial consumers who purchase silver for manufacturing purposes, investors may acquire silver specifically for wealth preservation. This creates an additional layer of demand that can emerge rapidly in response to changing economic conditions. Inflation concerns, currency uncertainty, government debt levels, and monetary policy decisions all influence investor behavior. When confidence in traditional financial assets weakens, interest in precious metals frequently increases. The silver market is relatively small compared to many other global financial markets. As a result, even modest shifts in investor demand can have meaningful effects. A relatively small amount of new capital entering the silver market may create significant pressure on available supplies. Institutional investors have also begun paying closer attention to commodities. Years of underinvestment in resource development have raised concerns regarding future supply availability. Pension funds, asset managers, and large financial institutions increasingly recognize the importance of resource security. This growing institutional interest has the potential to amplify existing supply pressures. Large investors possess substantial capital resources. If they increase allocations towards silver and other commodities, available inventories may decline further.